Hello everyone, it's Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, Head of Capital Markets at AD Mortgage, here with you today for our weekly AD Digest.
Hello everybody. Hello Alex.
Hello Billy. Last week was, I think, the most important week of May. We were all expecting Fed meeting. We saw a rally and then a sell-off right after that. Treasuries were jumping all around yesterday. We saw many lenders repricing their rate sheets up and down. People were trying to lock in these volatile times. I hope everyone had locked their rates before the rally. And after the Fed's meeting, rates have stabilized a little bit. So Billy, Fed has raised Fed funds rate by 0.5 point percentage. And they have indicated that 75 bips hike in June is more likely off the table. That was the positive news, which sparked some rally on the market. What do you see, what we can expect from Fed, from their actions on the balance sheet, from their actions on tackling the inflation, and where we're headed at the end of May, beginning June?
Well, okay, so they raised rates 50 basis points, which everyone knew they would. First time in 22 years, but it was expected. And they announced that they would, one thing they said, that comes new, is that we could see as many as 3 more or more 50 basis point hikes going forward. So now, whereas the last meeting, 10 of the 12 governors were thinking 1 3/4 by year, and now it's going to be closer to 2 3/4. Or it appears that way. They also said that starting June 1st, they will begin to unwind the balance sheet to the tune of $47.5 billion a month for 3 months, and then they're going to double the amount. So to me, that puts pressure on the long end of the curve. More than likely, it steepens the curve. They'll probably be selling off something longer than 2-year treasuries and mortgages. And so what we saw after the Fed, the 5-year and hung in pretty good. The 10s and 30s took some pressure, and I think that's due to their announcement that they'll be selling off the balance sheet. So I think that's what we're going to see going forward. We're going to still see pressure on the long end, as they unwind their balance sheet. Everyone knows now that Fed funds are going to rise at about 50 beeps a clip for the next several months. But I think if the 5-year can hang in here through unemployment, then we could actually see these markets turn around and rally next week. The 5-year has come very close to the November 18th yield crest, which is the best support on the charts. With the curve steepening now, the 10s and 30s are closing in on the same levels. And so I think there's a reason to be optimistic in the face of what looked like terrible markets right after the day after the FOMC meeting.
And I believe the yields are close to their highs. What do you think are the best indicators for us to look at and figure out whether the economy is already heated and we'll see some rate reduction in the coming future?
Well, actually, prior to the FOMC meeting, which was the most important news of the week, there were almost a dozen indicators since we last sat here together. More of them were market negative than market positive, meaning they showed a stronger economy. If the jobs markets hold up, which we'll find out, then the economy will look good. That does not mean the Fed's not going to be raising rates, but I think we can look for a corrective recovery in the markets. The short end does not need to be this far above Fed funds. They just wanted to get ahead of what the Fed was doing. And while the Fed will put pressure on the markets when they sell off their balance sheet, if the short end can rally and the yield curve can steepen, the long end will follow. It just will not rally as much. So that's what I would look for. The key to me will be to see the 5-year rally try to come back, and it remains below the yield crest from right after the FOMC meeting. If the 5-year can come back and the yield curve can continue to steepen, which it's been doing for about a month now, then I think we'll see better days ahead, and maybe for a month or two we could see yields start to come back down across the curve. Long-term horizon, we'll still see yields rise.
To remind our audience, conventional rates today are at 5.15%, and non-QM rates are at 7% today. We are working on expanding our non-QM guidelines in order to provide a better product for our partners. And we are looking to add commercial products to our product line in the coming future. We'll be interested to see if some of our partners are looking to submit commercial small balance loans in the coming future. So let us know.
Sounds exciting, Alex. Look forward to the developments.
To remind everyone, Billy and I will be attending MBA conference in New York from May 15th to May 17th. I hope everyone who had an opportunity has already reached out to us in order to schedule the meetings. If you have not done this yet, please reach out to myself or Billy in order to schedule some meetings with us.
Alex, and don't forget everybody that we're having a cocktail party, and you can reach out and we'll send you an invite, RSVP, and come see us at the cocktail party.
Oh yeah, that's a perfect addition, Billy. And what would be our booth number where we will meet everyone?
We will be at booth 401. I will be there the better part of Monday and Tuesday, and want everyone to come by and say hello and grab some of the good giveaways we put out.
For the upcoming webinars and developments at AD Mortgage, we're looking to host a webinar on May 10 on correspondent lending. On May 17th, we'll be talking about DSCR loans and opportunities for investors. And on May 24th, we will have a webinar talking about bank statement program using 12 or 24 months bank statement, either personal or business, and what are the income calculations for those. So I hope everyone can join the webinar in order to learn a little bit more about the program that we offer.
Sounds good, Alex. Hope everyone has enjoyed this, and look forward to seeing you guys in New York in 2 weeks. And we'll be sitting down here again a week from now, talking about lower yields.
Thanks, everyone. It was Billy Abrams and Alex Suslov with our weekly AD Digest. Stay tuned.